You take everything from me. I think I'm willing to do the work and I know how to sell. I would go door to door and we'd sell pest control contracts under whatever uniform they paid me the most money to sell it under. And I'd sell them the contracts for $1,000 a pop. And, we'd make $250,000 in that summer in profit. Everything in life needs to be focused around for the entrepreneur without money coming. Every single decision you make is the path of least resistance to get 10 or 20 grand a month coming into your bank.
1, 2, 3, 4.
Hey there. Welcome to the Small Business Black Holes podcast with Alan Pentz, where we help you navigate today's chaos with precision. Your host, Alan Pentz, has 25 years of experience working in business and government, and he knows how the old rules have fallen apart. Each episode, we'll explore how to thrive in this new landscape by mastering the small business black holes while everyone else is still figuring them out. Let's dive in.
All right, welcome back to Small Business Black Holes podcast. We have a very special guest today, the infamous Nick Huber. He's so famous, he's infamous. He is an investor, a frequent ex-poster. He is a media personality now and owns like more companies than he has fingers. And he's the author of a new book called The Sweaty Startup. Nick, welcome to the podcast.
Alan, thanks for having me.
Yeah, it's great. So tell us a little bit about the empire now. Like, what have you got under your umbrella? So if listeners don't know you.
Yeah, so the Bolt Storage, my real estate portfolio, is kind of the original, business, and the majority of my net worth, kind of the majority of my focus. We have 64 self-storage facilities, about 2 million square feet, 50 employees now that help us kind of manage that, not counting the on-the-ground contractors that do a lot of the work at the properties. But 2022 started a company called RE Cost Seg. That was growing really fast. There's three monsters that have grown out of the portfolio where I started a lot of companies and invested in a lot of companies back in, 2020, 21, 22. And then the third is somewhere.com, which is a pretty big acquisition that I made earlier in 2024. So those three are the majority of the focus today. But yeah, I got started in the pickup and delivery storage business with a company called Storage Squad. 2017 is when we opened our first self-storage facility to kind of pick the timeline here. And then we started buying a lot of storage and growing the business in 2020. And then, the last couple of years have been pretty crazy ride.
Yeah, and RE Seg is a real estate cost segregation. So like when you're doing that study to take accelerated depreciation, which hopefully we'll be back. We'll see.
Coming back, I hope it happens. But yeah, that business has been a pleasant surprise for sure. It's, we're pushing up towards $1 million a month of revenue with 50 people. So yeah, it's been a good ride.
Wow. How is self-storage doing, by the way? I haven't updated on the real estate market recently.
Yeah, our portfolio is doing pretty well. We got through all of our refis without any cash in at all from any of our investors. So we're from the deals we bought in 2020, 2021. But performance is also improving slightly as the real estate market the home sales market comes back a little bit as far as transaction volume, but it's nowhere near, as far as rental velocity, storage rental velocity, the operations, it's nowhere near where it was in 2021, because it's kind of fueled by folks moving.
Yeah. And how's the buying of them? Is it still kind of frozen out there, or is that moving?
It's still slow, that's for sure. We're getting a lot closer. Our team sends 4 to 8 offers a week on properties. We underwrite, 40 plus a week and end up getting to the offer stage on 4 or 5. And we've got a deal under contract in the last month, which is great. But yeah, people still want.
Just a bid ask spread is not right.
Yeah, people still want 2021 prices.
They sure do. With 2025 interest rates and 2021 prices to not go together.
That's right.
Cool. So let's talk a little bit about the new book. So you're kind of known as a contrarian and kind of started out with this talk about sweaty startups, like the real business is in regular boring businesses, and don't try to be Silicon Valley moonshot guy, right? So it sounds like you've turned that into a book now. Is that right?
Yeah, I think you talk to the average person on the street about what entrepreneurship means to them. and they're going to point to Mark Zuckerberg, Elon Musk, Change the World, Silicon Valley, New Ideas, Shark Tank, Product Hunt, and these circles that hang out with us on Twitter. And in my life, and in your life, I'm sure as well, those are not the people that I know who have built generational wealth, period. The people who have built generational wealth are the ones who run, surveying business. A guy in my town runs a sprinkler install company, sprinkler service business. It's massive. I mean, they're in, 3 states here in the Southeast, and they do 50 plus million a year of revenue. Massive, massive businesses. They're just normal, old fashioned companies. So my book is all about how to spot those opportunities, and then the skills required to go and operate and execute, which is the hard part.
Yeah, one of my friends from Mastermind I'm in, I've had him on the podcast before, but Sam Bacon, he's down by your way in Atlanta, and he has like an empire of scrap yards and a demo business, and the guy's doing tens of millions a year in revenue and an amazing bottom line, and he owns scrap yards. I mean, it's and so you kind of some of the stuff you say is like passion's overrated, right? Like having an idea, being brilliant. Those are kind of, it's fine. I guess it's fine for that 1 in a million shot, right? Where you're gonna, you're gonna zoom to the moon. But for a regular day, it's like, hey, you don't need to have a passion about having a great plumbing business, right?
The funny thing is that you need a lot of skills to run a company, and people think, and frankly, you need money as well to run a business at a high level. And so when you have the money, when you have the skills, that's when it's actually time to go try to change the world a little bit, mix things up, maybe start something new. But yeah, if you don't have a business yet, if you're trying to accomplish the financial freedom, if you're trying to accomplish a little bit of wealth, that first business is about, trading your time for money and then making a hire and then trading your time for more money and making another hire. So my book will never sell 1 million copies because it's about the sweaty, not fun, not sexy way to go about this. But yeah, I think there's a lot of horrific advice in entrepreneurship. Follow your passion is number one, because I've learned very early in my career, and I'm sure you have as well, that the market doesn't care about me and what I want to be doing.
Right. Well, what do you think? So you've had some views on the whole searcher movement too, right? So, what you talked about there is bootstrapping sort of a regular business or a professional services business where you're doing all the stupid stuff like trading time for money and blah, blah, blah. But that's what gets the cash flow going, right?
Mistakes in the early days. If I'd have bought a business, especially with leverage, I don't know if I'd still be in this game, honestly, today. So I love the search model. I love what Cody Sanchez is doing because I think it's true. Like, it can work and it is really good. And I'm not one of those people who will yell from the back saying, don't make the content if it can mess up one person, right? I think people are old enough and responsible enough to make their own decisions with their career and their money. But business is humbling and business is really freaking hard. And if you go in wet behind the ears and buy a big old company thinking you're just going to turn on digital marketing and get some software in place, I think you're in for a really tough ride.
Yeah. I mean, a couple of things I always remember is like, if you buy a business that has no leverage in it and put leverage on it, you've now got a different business than you had before, right? And the second thing is, I think that most owners who are successful who bootstrap did it. Really, what it came down to was that they were good at sales or marketing or something like that, right? And so, like, if you go buy a business, you don't need to be good at sales necessarily to do that. So then you can get in real trouble. Like, that sales engine turns off when the owner leaves, and you're in trouble.
People think these owners are old school and don't know what they're doing, but they're really good at some of these things that are very important to run a company. Communication, getting people excited, selling. Yeah, these old boomers can run companies and they don't get enough credit.
Well, I think the other thing we have to say is, like, many of them are not transferable companies, right? They are boomer, they're based on the boomer, who is great, and they hustle it. But without the boomer, they're really not worth all that much.
And businesses, like a piece of real estate's one thing, right? If I buy a piece of real that has 200 units and people are paying rent in 200 units and there's a physical building on a physical piece of property on a physical road, there's only so much variability that can happen there. But in small business land, you can have a $2 million revenue month, and then you can have a $900,000 revenue month, and they can be 3 months apart. And if something happens inside your culture, you hire the one bad manager, the next thing you know, your employees are kicking off, 5, 6, 8 of your key people. And 6 months can go from, holy cow, we're doing really well here, to turmoil. And if you have bank coverage on that thing, it can go south super, super quick. So it's you get paid a lot of money to be an entrepreneur who is really good, but you get paid that money for a reason, because it's hard.
Yeah, right. Yeah, and it's a pain in the ass, and so there's a pain in the ass premium, right? Yeah.
Oh, the return on brain damage is a massive part of, nobody puts enough account for the brain damage that you got to withstand.
Okay, so you've now bootstrapped like a services business, turned it into a real estate portfolio. You then, kind of launched in media, but you acquired another services business, a big one, right, somewhere. And you've done, launched other kinds of businesses, right, with cost seg. So looking back now, I mean, it's a pretty big portfolio of stuff. What do you think what are the big takeaways like from that process? Like, cause you've been on the real estate side, you've been on the services business side, you kind of, you've been in all these different camps. And what do you take from that? Like, what advice do you give the person starting out now, based on that, broad sweep of experience?
So it's a power law, first of all. We've shut down the web development company's not taking clients right now. Heuer Method, the sales coaching business, is shut down. RecruitJet, the US-based recruiting firm, is shut down. Several others are not quite, like, they're making a little bit of money, but they're not there yet. They have potential. We're nurturing. But then 3 of them got really, really big. So it's the power law. I'm glad I took the shot, because I didn't know that RE Costleg was going to be the one to go bananas, or that somewhere was going to turn into such a big company. So that said, holding companies in general, everybody wants to run a holding company. Everybody wants to read books about Warren Buffett. Everybody, idolizes these folks like Brent Beshore and Andrew Wilkinson, who hold these companies and grow these businesses. Still, 9 out of 10 of the wealthy people I know had one business. So it's worked for me. I'm speaking out of 2 sides of my mouth here, but odds, like, if you just play the odds, the wealthiest people I know, 9 out of 10 of them had one company, not multiple. I mean, maybe they had an operating company and they also invested in real estate or something like that, but very few had 2, 3, 4 totally different businesses that they invested in, got ownership in, and whatever else.
Yeah. So one of the things I talk a lot about is owner freedom and independence from the business, and how that changes over time, right? Like, you have a $2 million services business, you're not handing over the keys and walking away to play golf, right? You're still involved, but you can style the business so that you do less of the BS, right? So, like, how have you been able to do this? Like, have all these different businesses and not actually be running them?
Yeah, it's really hard. So first of all, I'm still involved in all of them. Like, I am in my weekly acquisition calls at Bolt Storage, like, looking at our pipeline of deals. I'm looking at the revenue reports every single week or month to see, like, what's our year-over-year revenue growth over last year? What's our rental velocity at these different properties? I have good data on the back end that allows me to really see inside the company what's happening. That was its own project in and of itself, to get that data where you can actually see what's going on inside your brain. Not as clean and straightforward as people think it is to, like, know what's happening inside your company. But it's all about hiring really good people. And not just hiring really good people, but, like, empowering them to start to make some of the decisions for you. If as a business owner, every decision flows through you, it's impossible, because your desk ends up with all the monkeys at the end of the day, and you got to take care of them. So yeah, I'm not a good person to come to with a problem inside my companies, because I very rarely say, get out of my way and I'll solve this. I almost always throw it back on my people and figure out how to think about things.
Yeah. So how do you recommend getting the good people? That's a challenge in itself.
You got to have cash flow first, because good people are expensive. And frankly, you got to build a business in the early days that can thrive with pretty normal people. If, like, you listen to Mark Zuckerberg talk about his early days at Facebook, and he'll give all the credit to hiring amazing people. I hired unbelievable people. They were just spectacular people. Like, a freaking landscaping company or self-storage company or a recruiting business. Like, what kind of world-class unicorn entrepreneur right-hand man wants to come work and sit on my lawnmower and mow grass? or doing a trench and dig utility lines, or get up in the attic of the building and install these sprinklers. You have to build systems and simplify the job, be a good enough leader that normal people can thrive at it in the business. So that's step one. And then as you get cash flow, as you have the departments and divisions of your business, that's when you can hire good people to make some decisions and block some of the stress from coming straight to you as the owner.
Yeah. So I really emphasize with people that you've got to really look at each stage of the business and say, hey, I was only able to afford this at this time. And so when you get to the next stage, you got to level up the talent, right? And sometimes that can be people who are there if they're the kind of people who can grow, but sometimes you got to bring in new talent, right? Because now you have a bigger operation, you want to get to the next level, you're gonna have to pay up for the next level of talent to get there.
And if you're making a couple $100,000 a year, and that foreman or project lead or operating manager is going to cost you $150,000 a year, it's not feasible. Like, you're not that phase yet. So absolutely, Alan, is that like the early days, you got to make do with what you got. You got to grind. You got to solve problems. You got to get your cash flow to a certain level, and then you start to level up your team. A massive part of my advantage is somewhere, because we recruit through somewhere at all my companies, so I can hire head of finance for $3,800 instead of $1,200, $1,500, $15,000 a month, right? So hiring internationally has been a massive advantage for me. I have 20 Americans and 320 international employees in the portfolio.
Wow. And so you're seeing that trend that you're tapping into it somewhere continuing, right? Where the global talent is becoming like a key factor in keeping costs in the right place.
People don't understand that, yes, you can get an assistant, like you can get somebody who can do repeatable tasks over and over inside your company, but you can also find people who have run businesses before and run marketing departments and run sales teams. And you can hire them internationally too. And that's a massive unlock when you can build your management teams overseas.
Okay, well, so let's talk a little bit about media and business. So you've kind of become a media celebrity in this niche, right? And you're hanging with Sam Parr and Shane Puri and all that. So how has that kind of changed business for you?
Man, it changed everything for me, because early, before I was kind of in those circles and I got to know a lot of the other people who create media, which there's a lot of synergies there we can talk about. But in the very early days, I was just talking very openly about my storage units. I was screenshotting, my profit and loss statements. I was showing my rental reports. I was talking about how my team's structured, how we buy, where we're buying. And I got a lot of people following me. And then I was able to start to raise some money from the people that I met. I would find myself in a Zoom call with a family office, or I'd find myself in at a coffee meeting in Atlanta with a PE group. So we went from having, and real estate, my first business, is the most capital intensive business in the world. It's an unfortunate about it. If you got no cash and no access to cash, it's just not an approachable business for you. Well, Twitter gave us the access to that capital. So we went from having, 6 properties that my family and friends bootstrapped it together. And then my partner and I bought a couple deals without any investors, to, okay, now we can raise, tens of millions of dollars. So 2020, 2021, we raised, 30 plus million and bought a ton of storage on almost solely on the back of the people and the connections I started to make on media. Now, I wasn't doing the, Reg D, non-accredited investors running ads on social media like a lot of people do. I was talking about what I was doing, how I was running companies, and then starting to get in the room, get meetings with people in real life who became those investors and LPs. So that turned my business into a 6-person, 5-property shop to like, we are still very small scale in the private equity thing, but we bought about $100 million worth of storage. It's been crazy.
Yeah, that's amazing. And that seems like, somewhere sort of came out of that too, right? Is that same group of people, and you're able to build businesses and promote them using X as well. So
Ari Kosseg, my partner, is Mitchell Baldridge. I met him on Twitter. The synergy, what Twitter did is it advanced my career. It advanced my career 40 years in 3.
do you still see that happening today, or it's changed, right?
Yeah, the days of growing on Twitter from nothing are over, unless you do short form video.
So where would you be now if you were starting out now? Or is there anywhere?
So the people who are, if we look at the people who are growing now, it's Hermosi, it's Cody, it's Chris Corners came out of nowhere to um, grow his media. His Instagram's at almost 1 million. Like he's getting hundreds of thousands of people on his email newsletter. It's short form video. So if you're not willing to record yourself and make these 30-second videos with the hooks at the end, you're not going to grow on social media right now.
Yeah. Yeah, it's interesting. So do you now view yourself more as a media entrepreneur or more of a, business owner who happens to do some media?
I do think that a year or two ago, I had to kind of decide which way I was going to go. Am I going to have a cameraman follow me around and try to grow this media empire? Or am I going to keep talking about the stuff I want to talk about, riling people up on X, not really getting any new followers, and then writing really thoughtful content about business and writing my book, but then also leveling up as an operator and learning how to operate companies and build management teams and grow companies, which I still have a lot to learn there for sure. But I kind of decided that the media is secondary to the business growing.
Yeah. And that was, do you think that was just like personal preference or was it a better business decision?
That's a really, really good question. I'm an opportunist. So I think if there was more money to me in the media, easier on me, like what I am good at, which is writing the written word, then I probably would have continued along the media path. And look, I'm going to write more books. I love teaching. I love what I do online. I'm not at all saying that my media is going to be gone. Like I have 6 full-time people on my media team. It's one of the most important things that I do. But if I can turn somewhere in from a $50 million company to a $250 million company over the next 10 years, like that's generational stuff. So I'm kind of focused on the businesses at the moment.
Yeah. So I think the other thing I'm kind of pulling out from you is that to continue to grow on the media side, you're going to have to expand the aperture, right? So you can't just talk about the key details of growing a company the way you did before. You've got to get to this bigger audience. So like you got to do the Cody Sanchez thing where she's like, she's like basically just a celebrity that happens to talk about business, right? And you've got to get to that. Look, I mean, no shade on Cody. She does a great thing, but you got to go to a lower common denominator, right? Of people to keep expanding the audience.
Mosey's a really good example because he's doing both really well. I just don't know if I don't know if I can with what I have in the air right now. So if I could do what Hermosi's doing, I would absolutely do it. But I think he's world class at what he's doing.
Yeah, yeah, and I do think I think it's a different thing to use media as a leverage thing, and then just to become primarily a media person. It's a different. You're setting yourself up for a different kind of life, right? Which can be great. It's just a personal choice. So let me ask this: if Nick Huber got dropped off in the middle of somewhere USA, anywhere USA, and you didn't have any of your businesses, you didn't have your Twitter account, and no access to capital, you have $5,000. What would you do to get to 10,000 a month the fastest possible?
I think I'd start a door-to-door sales team business for pest control companies.
Oh, interesting. And why? Tell us more about that.
Because if you're super scrappy and you can sell, which if you take everything from me, I think I'm willing to do the work and I know how to sell. I could get a crew. I would go get a crew of 7 to 8 other people who can sell. I would sell them on joining me and we'd go to Columbus, Ohio, or, Bethesda, Maryland.
I have a no soliciting sign that's in my cooperative, so you can.
Yeah, but I would go door to door and we'd sell pest control contracts under whatever uniform they paid me the most money to sell it under, and I'd sell them the contracts for $1,000 a pop, and we'd make $250,000 in that summer in profit.
I love it. That's a great. So anyone out there who says, I don't know how to start a business, go right there. Going back a little bit to that, talking about searchers. One of the things that kills me is that 2-year search, right? And then, so you do all this work, right? And then you hopefully buy a business, and then you kind of turn off that whole machine. And it goes away, and it's like, my God, what could you have built in that 2 years? It was actually cash flowing at this point, right? And then and then bought a business to put on top of it or whatever, but it's a killer.
Knowing what I know now, I would never start bootstrap another company. I would only buy. But I've been through the ringer and I've learned a ton, and I have bootstrapped companies that pay me the money that I need to feed my family. So I'm talking on both sides of my mouth.
Yeah, yeah. No, I mean, I get both sides, but you don't need to take on risky debt at this point to buy a company, right? You can get investors, you can do other things, right? You have a team that can help you. But if I were one of these guys looking for a business, I think I might go do the door-to-door pest control and get the cash flow going before I did much else, right?
Everything in life needs to be focused around for the entrepreneur without money coming in. Every single decision you make is the path of least resistance to get 10 or 20 grand a month coming into your bank account. That's the way I feel about business. It's not the most popular way, but in my opinion, like you are a water hose at the top of a mountain and that is turned on, and that water's going to find the path of least resistance to get to the bottom. That's your job as an entrepreneur, is to find the path of least resistance and the highest odds to get to 10 to 20 to 30 grand a month coming in the bank. Because when you get 10, 20, 30 grand a month coming in, you are opened up to thrive and succeed and grow into the future as an entrepreneur.
Yeah, I love that. And then the most important skill to get there, sales and hustle, right?
There's a whole section of my book on sales because it's what I'm most passionate about. My eyes were open to this in a meeting. It was 2011. I just started my company, my pickup and delivery storage company. I was all excited. I went to the entrepreneurship professor at Cornell, entrepreneur in residence, and I was like, "Hey, I'm starting a business. I'm an entrepreneur now. Can I pick your brain and let's get coffee?" And we get in and we go to this coffee shop in Ithaca. And the very first thing he says when we sit down is, "Nick, how do you feel about sales? Do you like sales? Would you consider yourself a good salesman?" And I said, "No, like I don't like sales. I'm the visionary. I'm the guy on the whiteboard. I'm the operations thinker. I'm the strategist. I'm the entrepreneur." And he looked me right in the eye and said, "If you don't like sales and you're not willing to get good at sales, you're best off to go ahead and get a job now and give this up."
He actually did, unbelievable. An entrepreneurship professor actually understood it.
Yeah, and he spent the next 30 minutes talking to me about how every part of running a company is sales, from the vendors who don't trust you at the beginning to people joining your company to getting them to what you want to do to obviously selling your customers and so on. So yeah, it's been a journey.
So what other kind of rules of thumb or popular kind of thinking do you reject in the book?
I hate business plans. I hate how people spend 1, 2, 3 months vetting an idea. I have a concept in the book called the 10-minute drill, where a buddy of mine basically called me and said, "Hey, look, I got this business I want to start. I want to start a business. I want to come over and talk to you about it." We sit on my back deck here at my house. We're having a drink, and he's talking about this house painting business that he wants to start. He's looked at a couple franchises to buy. He's looked at a house painting company to buy. He has bought a domain. He's built a website. He's done 2 or 3 months worth of work. He didn't invest any money yet, really, but he'd done a bunch of work looking into this idea of starting this house painting company. The first question is to me, like, "Nick, what do you think of the business?" And I'm like, it doesn't matter what I think. It doesn't matter. He's like, "What do you mean?" I go, it matters what the market thinks. Let's figure it out. So I open my phone. This is the 10-minute drill. I type in house painting near me, and I call the first number that pops up. And the guy answers on the second ring on a Sunday afternoon. And he tells me that he can be there the next morning to quote the job. And he says, yeah, the crew opened up on Wednesday and that he's done. He did some painting for University of Georgia. He did a big old church. He's got the best shop in town. He's got insurance, all this stuff. Call the second guy, same thing. Third guy, he's literally trying to sell me on the phone, giving me a ballpark estimate, looking at my phone, looking at my house on Google Maps. This is Sunday afternoon. He says he has a crew that can start the next morning. So I look at my buddy after those 3 calls and I'm like, what do you think of this business idea? Ow.
I love it. Tell us something I'm getting. I'm starting a new venture, and I've been talking to the marketing guys about niching down. Right, like, find your niche, find the niche where you can operate best, and you need to do that for customer acquisition costs. Blah blah blah. So, what's your take on niches for business?
I think niching down is something that happens very slow over 10 years.
So, say more about that.
I think at the beginning as an entrepreneur, you say yes to as much stuff as you possibly can. Can you do the job? Yes. You want to try this over here? Yes. You want to try to help with this unique thing that you're not necessarily qualified to do? Yes, 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 yes. And then the niche develops when you start to realize what's profitable, what is working. If you try to force a niche without like letting the market guide you towards a niche, you're trying to force it many times. You're right. Like some of the entrepreneurs have that sense and they can do it. Most can't. And they end up trying to force a round peg into a square hole. So I like to get out, mix it up, and then a niche develops. Like we have a massive niche developing in somewhere.com, which is finance professionals in South Africa. You would have told me that we would have gotten a lot of CPA firms and wealth management firms and real estate private equity firms to build their finance teams in South Africa, and that like 20% of your placements are going to become that. I would have said, you're freaking crazy. It would have been customer service reps in the Philippines or executive assistants in Latin America. So yeah, it's one of those things about taking a lot of shots, right? And if you take a lot of shots as an entrepreneur, as a business owner, the niche kind of develops. But what's your take? Like after that advice and after the way you think about your company, where do you stand on that?
I think I understand the idea, right? So that primarily they're saying this because of customer acquisition costs. So like particularly in professional services, right? Like I can go on to LinkedIn or wherever, and I can identify a tighter group of people. And if I can do that, I can get them in faster. But the two things that always, and so I totally accept that, right? But that's only if I know that that product or service or whatever it is actually perfect for that niche. And the only way I can figure that out is by selling it to a lot of people and figuring out what works. Right. So I guess if I had something where it was like I have a government contracting business. So it was like my first business I started. Like if I had something that was really designed for those people, then maybe I already know that that's the niche, right? Because it's for me. But I can't do them. I can't do this like very abstract. Hey, pick one of the functions of business, because I'm looking at professional services. So it's like pick one of the functions of business and then pick like a group within that. So it's like I want to work with accountants on their marketing, right? That's sort of how I think the marketer thinks. That's a niche, right? But how do you know what you're doing is the right thing for that person? And how much time can you waste going after them? So I think I kind of I resist the advice naturally because it's not organic.
Yeah, I get a lot of the same advice because I have some great marketers around me. Sean, Marshall, Xavier, they're phenomenal marketers that are advising me all the time. And so many times their operational sense is actually correct and the marketing lines up with the ops. But then you get other marketers who come from not operating a company or owning a company, and they start giving advice on, okay, let's target this one thing. And then my business owner brain goes to the operations side. How are we going to deliver? What's it like what happens on the back end? And so many times the marketers are in la la land about, I love it. I love it. You got to go on the show and go on to my first million and tell them they're in la la land because they don't operate enough. I was thinking Sean Sieve and some others are business owners and operators. So their marketing instinct is right on.
Yeah, they can hunt it. Yeah.
Then you talk to the marketers, the trained marketers who have never kind of ran or owned a company, and some of their advice doesn't line up operationally. So you're like, I don't know about that.
That's right. Yeah. Well, I just go into ChatGPT, the new model, and I ask it to tell me what Sean or Sam would say about it. Right. Or if I'm pitching something, I just ask it, how would Sam Parr pitch this? And then it sounds like Sam Parr. It's great. So it's actually a great little trick. You can become a great marketer just by using ChatGPT. Really. So tell me a little bit about that process at Somewhere though, right? So you took over 2 years ago or something like that?
No, it's actually less than a year.
Less than a year. Wow. Okay.
In May. So it's April 21 while we're recording. The book comes out on 29th. So if it comes out around that, then it'll be about 1 year exactly. I closed on April 30th, 2024 on the transaction, but I was involved back in 2021.
Right. You were an investor, right? before.
Yeah.
Yeah. And like when you came in, was that niche there for finance in South Africa? Or was it something?
No, general operations assistants and executive assistants, which is a niche in of itself. Like our original niche was, and we still do a ton of it, which is just like a team player, an executive assistant, somebody to help manage your calendar, a right-hand person, a chief of staff type person from the Philippines or Latin America. That was our niche. Like that was over half our placements. Um, that just kind of developed that a couple businesses came to us and started hiring accountants in South Africa, because in South Africa, 30,000 of them fly over to the United States and work during tax season on audit and tax work. And this is for big companies. This is for big companies. So then they go back and they don't want to just do this seasonal stuff where, yeah, they're making 8-9 grand a month to get on a plane and go over to the States. They want to have a family. They don't want to spend 3 months away from their family in a cubicle in Manhattan or in Maryland or wherever. So they look for a full-time job as a controller or as a financial planning and analysis manager or as a bookkeeper or as an accountant, and they get hired all day at the U.S. companies for $3,000 to $4,000 a month, which is just, they're unbelievably professionally mature. Like they've worked at big four firms in the United States. So it's just a huge value arbitrage there.
Wow, that's amazing. And then, so did you change marketing once you saw that? Like, hey, we hit this, it's been successful. Do you now?
Yeah, we haven't figured out marketing yet somewhere, honestly. Most of our business is either repeat business or referral business.
Right. So the original marketing hack was you and Shane, right? Like promoting it on your social channels. That was sort of the original hack.
And that works a little bit still. Like me and Sean together send 20% of the clients to somewhere, but the other 80% now are repeat business and referral business. Our pay per click on Google does a little bit. Our organic social ads, we are close to finding a couple that click, but I'll keep you posted. We haven't found a scalable marketing method yet.
That's interesting. I'd really love to hear about it, because one of the things I've gotten really into recently is like looking at the channels that people are using and how do they find the fit. And to me, the first thing you got to do is look at that long-term value of the customer to customer acquisition cost, right? So that's a SaaS metric, but vaguely, I think it works everywhere. And I see entrepreneurs coming in who have they're getting 11 times for a LinkedIn ad. So they spend $1, they got $11 in revenue. And I'm like, dude.
Or a lifetime value of a customer.
Yeah, and the lifetime value of the customer, right? So 11 to 1.
We're losing money bad year one though on these SaaS models.
Well, so on a SaaS model, they want you to be at 3 to 1, right? That's anything below 3 to 1, they hate. Anything above is good. Anything at or above, but they have 70 to 90% gross margins, right? So I think once you adjust it for like a services business, say you're 60% gross margin, 20% bottom line, I think you can do 5 to 1. And if you're more like, or 4 to 1. And if you're more like 50% gross margin, 15% bottom line, maybe 5 to 1. But you'll pay for that customer pretty quick. But I have people coming in that are like 11, 15, 20 to 1. I'm like,
Yeah, those are good business.
go spend more on marketing, right? Like, what are you doing? You could like triple your marketing spend and you'd still be way above this, right?
Windows closed too. Like they only have so much time.
Of course, right? So I feel like this is one of the most under-discussed issues, particularly in sweaty startups and stuff, is that people aren't measuring their marketing spend, and they're not, as a result, they're either, spending too much, not spending anything, or often I think it's spending too little. That's actually what I see more than anything else.
It's unbelievable the amount of companies that spend high spends to 50, 100 grand a month without the right data. It's unbelievable. Ad Rhino is one of my companies that's not large yet. We got about 30 clients, but 2 of them are somewhere in bulk storage. And actually 3, somewhere in bulk storage and our constantly are all at Ad Rhino. We use HubSpot in all of them. And the same system works in all 3 companies on how we get data on our ad spend. So it was a process though. Like it was a lot of work to get the correct data and track around different, because nowadays companies have we have a software to run our operations. We have a software to run our back end sales. We have ads across 3 different platforms. It's not easy all the time to track those leads to the right source.
Yeah, and I feel like we talked about sales being the skill to, bootstrap a company. I feel like, so, there's a transition at some point where I think first thing is you got to create a professional sales organization where you can take some of what you did and turn it into a system. But I found myself increasingly as I go along, like seeing marketing and understanding the spend and the return on marketing is the key. And there are a lot of hacks, like you guys have talked about. You can hack your way using media, other things to get a certain level. You can really get yourself going. But you've got to get this granular ROI tracking and experimentation methodology to scale, right? You can't just keep spending more and more on Google ads to get there, right? Or maybe you can, but you can only do a certain kind or follow. But I think that's one of the most under discussed issues out there is like how your sales and marketing gets more and more refined and sophisticated over time.
Yep. People don't do enough highly paid referral campaigns either. You literally pay your customers to be salespeople.
So how have you designed that in the past?
Oh man, I don't know if I can talk about it just because it's one of the things that we're kind of excited about working forward. But let's use the example of a pest control business. We don't do this at my pest control company that I'm an investor in, but let's say somebody is a client. You send them a postcard, say, "Hey, and introduce us to your friend, and we're going to send you $250 cash, and your friend is going to get a $250 credit on their service." I as a pest control owner, I'm paying $1,000 to my sales team for a new contract. I'm paying $1,000 if I pay the door-to-door sales team. Why would I not pay $500 all freaking day to get a organic word of mouth client?
And you just cut your CAC in half, right? Customer acquisition costs. So that's pretty amazing.
Every time you get a client, you have another salesperson.
Yeah. Yeah. I love that.
Obviously, most people don't care. Like in the cost seg business, these are in professional services, it's harder, right? Because if you're doing a cost seg, you run a real estate private equity company, you don't care about $250. But a pest control customer sure as hell might. They can get their neighbor signed up and they get $250 cash. Damn, that's grocery bills for 2 weeks.
Yeah. And I remember, there are other ways to do it though. Like Chris Powers has talked about, they pay higher commissions for seeing deals first, right? And it's like, hey, I could try to optimize my cost here on one metric, which is, what transaction fees do I pay? But if I look at it in the context of my lifetime value and the CAC, this is a no-brainer, right? Pay them 15% more or 10% more is a game changer for them and might be a rounding error for you.
It's very uncomfortable for many business owners to look at that as an investment. They're like, well, I was going to get that customer anyway. Why would I spend $500 on that? But they don't think about the viral impact and the, what do you call this? The marketers have a funny name for it, like viral impact on, there's a term for this, like bias or something like that, where it's like, it's a factor of how many people tell other people basically. So it can be 1.5, meaning every customer you get is going to bring you 1.5 additional customers.
Ah, okay. And so I haven't heard that concept. So it's like you're measuring your referral program basically based on how many customers on average each customer then brings on.
Yeah. How many customers does each customer refer is this term. And the people listening, I'm sure they're saying it. It starts with a V. It's it's an acronym with like 3 or 4 letters. But anyway, it's a measurement that, are your customers selling your product for you?
Oh, and this is something you guys have been looking at this at different companies?
Yes. So it's logistically a nightmare to implement because you got to track these things. You got to pay people money all over the country. You got to do a lot of tough things. But yeah, we're looking at it pretty closely right now.
Yeah. And I think this is like a process people need to really think through because as you said, it's a very, measuring marketing, getting the ROI is kind of an art, right? And there's a science and there are numbers behind it, but it's, it's like the old John Wanamaker thing. I know that half my advertising is useless, but I just don't know which half. Right. And but you've got, I think it's like, I found that when you see great entrepreneurs, they can kind of move from sales into analytics. And that's like, as you scale, that's where you can do some really cool stuff and like start gathering the data. You got to get it a piece of it at a time, right? You're not going to be able to build a perfect ROI marketing system overnight. But it becomes like this little adventure to figure out where you can get growth.
Another massive part of this is that a lot of business owners, especially small business owners, don't have their salespeople and reps and grounds crews on variable comp. And moving all my organizations to variable comp pay for my salespeople and account managers and project managers over the last 2 years has been a total game changer for productivity. So like an example is an account manager at one of my companies. They get paid, let's say, 2% of revenue on everything that they oversee. If they drum up and sell their own additional work, meaning they're getting a referral, they're getting more repeat business, they get another 2% commission on that stuff that they bring in. I love empowering, motivating the viral and repeat nature of business financially. And then all your account managers and salespeople should be on more than 50% variable comp. Even the people who answer my phones for storage units, like their base salary is $700, $800 a month, but they're getting $1,200, $1,300, $1,400 a month of variable comp because they get paid $10, $15 every time they rent a storage unit. They get paid $20 every time their name is mentioned in a review on Google. And they are motivated to do that. And it's in their script to ask for these reviews. It's in the script to make these sales. And as we pay them more money, we make more money, which is just, it's a beautiful thing.
Wow. And how was the transition of getting people to go there? There's a lot of people, resist that, obviously.
Yeah, you basically you guarantee a certain amount of variable as a draw against commission for the first 3 months of the transition. And then you make 10, 15, 20% more money all set in if they're doing well. The step-by-step process. First, you have to be able to track it all, which is a bitch. But once you can track it and you know how your reps are performing, performance management becomes way easier. You have reps that are not closing the way others should and the way others are, and they need to be gone or coached. And then you have their data. So I get to go to one of my reps and say, hey, Paula, the last 3 months, you've rented an average of 86 storage units a month. I want to change that so that you get $20 per rental. Let's do the math together. That's $1,700 of variable comp, but your base is going to be cut way, way down. But like, let's do the math here. You're making 20% more money. And then instantly her brain shifts from, hey, I'm just in here running the motions, answering these phones, to holy cow. What if I rent 100 units next month? I make $2,300 a month. I'm in the top 1% of earners in South Africa.
Yeah, that's amazing. The other thing I've been doing and seeing with a couple of people is they're now taking, they're getting an AI agent to record the calls, and they're now putting the transcripts into ChatGPT or whatever. I mean, the new model is incredible. I have it do it on every sales call I do and say, like, what could I have done better? Develop me like a talk track, my script. And then I have it score me against the script. And it is incredible. Like, I've learned a ton. And you can you can take people, I think you can make them 50% better salespeople just by doing that, if they're open to it, right?
I think quality control is where AI is going to change everything. I'm not pro AI by any means. I'm following it very closely because I have so many employees, and if they can either do more work or can get it done with less people, like, I'm all for that. I think the agents, like the talking agents that actually talk to customers, I think they're a joke at the moment. I would never pay $50, $100 for my phone to ring to have an AI agent answer the phone ever at any of my companies. Maybe like ordering a pizza, maybe so, but I still can't see it. But when it comes to monitoring every single email that goes out to my clients and my entire organization, and the feedback that my recruiters get by email, and all on, just like you're talking about, like making sure people can do their job and helping them do their job better through quality control and performance management, I think that's where AI can thrive.
Yeah. I mean, I know people are going to resist that because they feel like the AI is spying on them or something. But just personally, I found it's like made me a better salesperson. I mean, and I did sales for a living. So I find it to be amazing. And like just the level, I mean, the newer models now, it's so different than even a year ago, right? And it's just incredible what they do. So that's a good tip for everyone out there. But Nick, so if people want to reach out or talk to you, is X still the best place, or where are you found?
I read DMs on X. I also, just as a kind of a resource, if people want to dip their toe into the sweaty startup mantra and not quite buy the book yet, obviously the book's for sale this week, but the most visited page on my website is sweatystartup.com/ideas. That's where you can get the 300 plus business ideas that are not sexy, not fun, but almost all of them are bootstrappable, and there's people making really good money in each one. But no, my email is nick@sweatystartup.com. Me and my team read all those. And yeah, I'd love to get in touch with anybody who has questions, want a discount somewhere, anything like that.
Yeah, and the book is Sweaty Startup. It'll be on Amazon. It's already posted, I think, for pre-order, right? And you can get it there and learn all about how to be a real business owner, not one of these fake guys out in the valley. But Nick, thanks so much for taking the time. This is awesome. And yeah, we'll stay in touch.
Yeah, thanks for having me.
You've been listening to the Small Business Black Holes podcast with Alan Pentz. For more insights on mastering the new game, follow @apentz, that's APENTZ on X. And make sure to subscribe to the podcast so you don't miss a single episode. Thanks for tuning in. And remember, in today's world, you don't follow the rules, you write them.